Hello everyone and welcome to the first ever video of desirepips. Today, as you can see on screen, we are going to take a look at support and resistance. The reason being is because I find that most people don't know how to use support and resistance, and that is really a shame because everything that happens in the markets happens because of support and resistance, and once you get it, you can open a lot of positions based on support and resistance, and they are just all over the place when you're looking at your charts. So it's a great tool to do your analysis of, and I think not enough people know how to use it correctly, so that's why I'm going to discuss support and resistance today. Before we start, we have a risk disclaimer that you should be very careful when you are going to start trading with real money, that it always carries a risk with it. So let's get started. For those who don't know anything about support and resistance, when you think about these two words, you think about helping someone with the word support, and resistance you think about something you couldn't get through, for example. And in the financial markets, support means a level, a price, a line, or a zone to which the market came down and then bounced back up. Then of course resistance means the opposite, meaning that the market came up to a specific level, a specific price or a zone, and then the price came back down. So I'm going to explain it with an example. So I'm going to draw two lines. One line will be our resistance line. I'm going to give it a red color. Then let's copy this one and make this the support line. I'm giving it a nice green color. So this example will just be very simple, just to explain everything about support and resistance. So let's say our markets is going pretty simple, meaning it's going up and it's going down between our support and our resistance. So let's just finish this like so, and let's just do one more. So of course this example is not something you see all the time, and it's just really simple just to get the idea about support and resistance. So as you can see, the markets started, they went up, then they went back down, went back up, and they went back down. If you see something like this, where the markets are just bouncing between two lines, between two prices, then we are talking about a range or a channel. You can also have these kind of channels in a downtrend or in an uptrend, and then you would just have these two lines, the support and resistance line, in a uptrend or in a downtrend, but I'm just going to use this as an example. So based on what we see, we can expect at this point that the markets will probably go back up. So in a perfect world, you would be buying when the markets are coming to this point, when they are going to hit support. But before you start with opening a buy position or buying your currency pair, right here you need to have confirmation, because what also can happen is that a support or a resistance level is being violated, meaning that we would have a breakout. So when the markets are coming to your support or your resistance line, you always need to wait for confirmation. What a good confirmation could be would be another indicator, such as your relative strength index, your RSI. For those who don't know what an RSI is, it's basically an index which tells if a certain currency pair or stock or commodity is oversold or overbought, and that's a great tool that you can use along with support and resistance. Another one could also be a hammer, a specific candlestick pattern that you see, and then you have a second confirmation. Because as I said, what can happen is that the price breaks through your support level here, and then of course you probably would have made a loss. So this is of course one type of the trade you can do, but what also can happen in this range is that the markets are facing resistance and that you are going for a short position, meaning that right here you would sell, in this case Euro USD. So here you would go short, and like I already said, you would wait for confirmation. Once you have found a trading range, this can easily go on for a few days or a few hours depending on what time frame you're on. But what also can happen, like I said, we can have a breakout. Well, you might maybe think, well, okay, I have found support and resistance, but now it got violated. I have a breakout, and now these lines are useless. Well, they aren't useless at all, because when this happens, you can maybe put an entry order at this level, let's say above your resistance line, that you would buy the certain currency pair when it hits this level, and then you have a breakout, and then you would get a nice profit. But what you can also do is wait for the markets to retrace, because the markets always retrace. And in this case, your resistance line, this red line that just got violated and you had a breakout, will then, most of the time, if not almost every time, will then become support. So previously this red line was resistance here, then the markets went through this resistance line, they went up, they went back down, and then here it will be support. Of course, this doesn't happen always, but it happens a lot of the times, and it's worth to wait for. And if you can find a nice confirmation right here, then you can have a very nice trade. And this is why support and resistance is so important, because all these levels, all these prices that are support and resistance will always happen again. If not the same way, then you would have a breakout, and then the resistance becomes support, and the support becomes resistance. Now you get the idea about support and resistance, but how do we actually use it? How do we search for it in a real market? So I'm going to get my Euro USD 4-hour chart, and as you all know, the Euro USD is not the best type of currency pair to do just technical analysis, because it's influenced by a lot of numbers, about a lot of news. But even on this pair, support and resistance can be very handy. I already drew some zones, that I'm going to delete all of those and just have a nice, very fresh start. So let's get back to the PowerPoint. So I already explained support and resistance. Now here you can see, always use candlesticks. And the reason being, candlesticks are just perfect to do your technical analysis, because they give you the most information that you have. And one other thing is that support and resistance are zones and not lines. What I mean with that is that most people on the internet or in books, they will tell you, excuse me, that support and resistance are lines. Like we did earlier, I had two lines, a red one and a green one, the red being the resistance and the green one being the support. That was just for an example, but in most cases, in almost all cases, you don't have a certain fixed price to which the markets go and then they reverse. You don't have that, and support and resistance, therefore, for me, it is a zone in which the markets can reverse or break through. And this is really important because I'm just going to take a look at this part of the chart, because here we can see that this level was resistance. But if you say that resistance or support is a line, a fixed price, where would your resistance line be? Would it be here, here, or maybe here? And this is really a difference because if you, like I said before, do a breakout strategy, where would you put your entry order? Would you put it above here? Would you put it here, here? This is something that I think this is the main reason why most people don't get support and resistance, because they don't know how to actually use it. And doing it like this with one fixed price, with just one line, isn't just right to do it. So what I recommend doing, and I also do it myself because it's the best way, I use a zone. So I'm using this red box to indicate my zone. So when I have seen a certain structure in my chart, like I see right here, I see that this is a support zone, then I can wait for the markets to go back into this zone, and then right in this zone I wait for a confirmation to let it to indicate, to give me a signal from, okay, here it is going to reverse. But what also could have happened is that the markets went through this. So if I bring back my RSI, I can see that I had a confirmation, being right here I have a double top, and here I would have my RSI divergence. But that's something more complicated. But what also could have been a signal, but then of course it's not for this trade, but it was for this trade, is that this candle right here is a hammer, meaning that it has a smaller body with a big tail. So that would have been a confirmation, because this zone that right here is resistance was before a support level. As you can see here, it was support. Well, I also said on my PowerPoint to always use candlesticks, and this is where it becomes very handy, because the zones that I'm drawing these rectangles on are always the tails, and a candlestick tells us a lot of information, because the markets are a constant battle between the bulls and the bears, between buyers and sellers. And a candlestick reflects this war, actually. When you have a candle that goes up or down and it doesn't have big tails, then you can say it was a clear win for either sellers or buyers. But when you have candles that have very big tails, then it wasn't really clear. So for example, a candle like this, where you have almost an open and a close at almost the same price, then we call this an indecision candle, meaning the buyers and sellers, they couldn't win, and this often indicates a reversal. Well, when you have big candles, when you have candles with big tails, then you can also tell a story that right here the buyers were winning, they kept on going, but right here they couldn't close at this high. So what happened? The markets came back down, and this indicated a possible reversal, and right here the markets fell down. So you always need to search for these candles that have very big tails, and they often tell you something. And right here they told me, well, this level, this zone is a resistance level, because when the markets came back, you can see that right here it was a resistance level. So to spot these support and resistance zones, you can search for some candles that have big tails, and then you can do this. So you need to practice a little bit about finding some zones that have resistance or support, and then the next thing you can do is you can drag them to your left side, and then if you can see that your zone that you have drawn a rectangle on is then later previously had been support, and you know you are right, because support becomes resistance when it has been violated. And something that also tells us something, when you have a zone, either a resistance or a support zone, when it is being violated, it is often being violated with a really big candle. And as you can see previously, this level was a support level. But here you can also see a really big candle. I believe this is the biggest candle that is currently on my screen, so it really stands out. And usually when a support or resistance level is being violated, it is because of a really big candle. And as you can see, this candle kept on, it was a massive drop that happened. So it's really easy to spot a breakout. So here, what you could have done is you could have shorted here when the markets had been violated this level. But what you also could have done, like previously told in the example, is that resistance becomes support when it is being violated. So this resistance level became, this support level, excuse me, later became a resistance level. So here it was support, it has been violated, and right here it is a resistance level. So these structures is something that you will always see on every chart, either a 4-hour chart or an hourly chart. But the thing is that a support or a resistance zone or a level is more significant when it is on a bigger time frame than it is on a shorter time frame. When you have support and resistance on a 5-minute chart, it usually is being violated all the time. But when you have support and resistance on a daily chart, those levels are really key levels that doesn't get violated that often, but when they do, it's probably because of a big move or a big news. So what you can also see is you can just play around. You need to practice it, but once you get the hang of it, you can really use it to your advantage with your trading. And also what you can use these for is when you are in a trade and you want to exit the trade with a profit, you want to set up your take profit, your targets. And it's also a good reason to look left where you had previous support and resistance. So for example, right here we had this indecision candle, because the opening and the close of this candle was almost at the same price. So probably a lot of traders went short right here. And then as you can see, they were right, the markets came down. But when do you close this trade? Well, you look left again, and right here you can see that here there was a little support, and right here you can see that, I'm just going to help you all, like so. So you can see that all these tails, they are all at this level. So let's say here you shorted, then you made some profit, and then it went right here. So when do you close this trade? When are you saying, okay, I have made enough money and now the markets will reverse? Well, you look left and then you can see some structure. Right here you can see that it was some resistance. So when the markets came into this, in this zone, then you can say, okay, the markets probably won't go any further and I'm going to close half my position. So support and resistance can also be used to set up your stop losses or your take profits. So it's really more than just a way of analysis. It's really like how the markets work, support and resistance, because they always, most of the time, they almost always work. So support and resistance is something every trader should use. And when I hear someone that he doesn't understand this, then I find it really sad, because most of my analysis is based on support and resistance, and it's really simple. It requires some practice at first, but once you get the hang of it, it becomes really fun. So I'm going to go over the points that I have previously told. So support is the bottom level, resistance is the top level. You should always use candlesticks and search for the tails. When you draw support and resistance, you need to draw a zone and not one line. When you enter a trade based on support and resistance, then your stop loss should be under the support level and above the resistance level. Also, when you enter a trade, you should always wait for confirmation, because it could also have been a breakout, and when a support level is being violated, it becomes resistance, and vice versa. When resistance is being violated, it becomes support. So I hope you all learned something, and if you have any questions, please ask. Thank you.